What do you see most successful founders or entrepreneurs getting wrong about wealth creation?
Are too many of your resources in your wealth tied to your company? It's a phenomenal way at which to grow wealth. It's also plagued with a whole lot of risk.
So I've got in my hand here one Bitcoin, now crypto and blockchain. Do you think it's the future of finance or do you think it's a fad? As of December 16th, 2024, the firm manages $1.65 billion.
It is surreal. It's humbling. It's just that client first, focused, doing the next best right thing, having a phenomenal team around us.
I think this is you. Is that right?
Many years ago.
And who's that?
That is my oldest.
What would you say to this, Dan, if he was sitting here in my seat today? What career advice might you give him? And then what would you say from a father standpoint?
I've gotten a lot wrong, but the thing of it is, when I get things wrong, I do a good job of leaning into it, realizing it, and figuring it out. I think hopefully my girls would say, if there's one thing I've gotten mostly right, it is, it's that.
Dan Tresemer, founder of OnPath Financial. Welcome to the show.
Thank you. Thanks for having me. Excited to be here.
Yeah, I'm excited to have this conversation. And I don't know if you probably don't know this about me, but I nerd out on investing and that kind of stuff too. So
nice.
For the first time, I think this might be one of the few people we've had on that have the investment financial angle. So I'm really excited to talk today. So for the audience listening, could you give us maybe in one or two sentences what you guys do at OnPath?
I think it's a great question. And I think if you boil it down, we say a lot that we're in the peace of mind business, right? And how do we do that? We really do that by sitting in the middle of our clients' financial life, mostly, and just making sure that everything is coordinated. The reality is, along the way, what do we do day in and day out? We manage $1 billion for clients all throughout the country. We're experts in the financial planning and insurance realm. But that's just the commodity, right? I think the essence of what we do, we're in the people business more than anything. It's a exciting space to be.
Yeah. So we were just talking before we went live. We had a good, solid 2025.
Certainly.
For most kind of assets and equities and things like that. How do you feel about 2026? Are you bullish or bearish on 2026?
So here we go, right?
Here we go.
You want my opinion?
Yes.
So here, the real answer is, we always say our ability to react is a lot more important than our ability to predict. And we mean that because I think, when we're sitting in the middle, stewarding capital for clients, as much as we'll have a view on what's ahead, we have to be ready for anything, right? Like if you had asked me this question, if we were sitting here in January of 2020, right?
Oof, geez.
The landscape's largely the same, right?
Yeah.
I mean, we look out throughout the year, we think we've got the basis for a pretty decent year. There's some news reports of some things throughout the world. People are getting sick. We got an eye on that. Not sure what that's about. You fast forward a couple of months and our world changes, right?
Yeah.
So God willing, we have nothing like that, on the table here. But I do think that as much as we'll have a view on what's ahead, and I think it matters, our nimbleness is just as important. So is the foundation set for continued growing economy and thus continued market uptrend? Sure. Does that always mean it's going to happen? No. And no matter the path, we'll be ready for it.
What are some of the tailwinds that you're excited about for 2026 in terms of investments and potential opportunities to grow your money?
I think it's a really good question. I think a lot of it is just just the demographics, right? I mean, I think when you look at the advent of none of us have pensions anymore, right? This is the 401k world. The employment picture is fairly solid for most. It's weird. Confidence levels are bifurcated a little bit. It's not, some of the metrics.
Word.
Yeah, I mean, some of the metrics. And you hear a lot, right? You hear a lot about this. What they call this K economy, where I think if you ask people on the street this question, even last year, right?
Yeah.
Even though it was an environment where the economy grew, inflation was pretty moderated,
Hmm.
the job market was decent. Not everybody is going to answer that question with a resounding, hey, things are going great. There's a certain part of the population where that is very much true. But there are others that are hurting, where
Yeah.
wages have not kept up with inflation, and they're paycheck to paycheck or worse, and are really they're looking at 2026 with some concerning eyes. So
Hmm.
yeah, it's an interesting place at which to be. I think that kind of speaks to some of the wealth inequality that as a nation we probably have to think about addressing. But I think by and large, are we optimistic about just people are employed for the most part, people are confident. We're all programmed to save money, and that tends to be good for markets. Tends to be good, and away we go.
Yeah.
But just the same, there's always things to watch out for,
Yeah.
and that's part of our job as well.
Yep. Yeah. It did seem like 2025, you're kind of on the tippy toes, like what's going to happen here? And a new president comes in, there's some new policies, the tariffs hit. It was like, where the Fed going to cut rates or keep rates the same, or
Yeah,
there was just a lot of unknown. Was the AI bubble going to pop,
yeah.
if there is one? And I think coming into 2026, it feels a little different. It feels a little like we got past some of the hard things, and now it's kind of like, all right, we're all ready to take off. That's what
Yeah,
it
I
feels
would
like.
I wouldn't disagree. I think it's one of those things. If you want, whether you're a investor or business owner or you name it, um, if you, especially in this day and age, if you want to find something to worry about, you
You
you,
definitely can.
you can find it, right?
Yeah.
And that can be dangerous too, especially when it comes to things like financial markets, right? Um, if there is always something to worry about, and some of those things manifest it themselves in things like down markets, but most of the time they end up being non-issues, and markets and economies and trends get on the other side of them, and oftentimes they get on the other side of them pretty quickly. So I think that's one of the things as business owners or investors, that we there's trouble being too pessimistic. There's also trouble being too overconfident too,
Yeah.
right? So I think in most of the time, I think we find ourselves helping clients navigate the emotional aspects of markets more than the financial aspects of markets,
Mm.
because there are times where you're probably feeling better than you should, and there's certainly times where you think the world is coming to the end financially, and the reality is it's just not.
It's like the
Uh,
fear and greed index, right?
oh my goodness,
Yeah.
yeah, yeah, yeah.
Yeah.
Well,
Yeah.
there's a famous saying, right? I think this might have been attributable to Buffett: be fearful when people are greedy, and greedy when people are fearful, right? And I think there's a lot of things that are a little bit counterintuitive, and maybe by and large, investing can be one of them. So,
Yeah.
gives me and my team a reason to get up every morning and get after it, because it's not
Yeah.
always easy, and
Yeah.
thankfully that's sometimes where we come in.
Yeah. How does what the Fed does change in terms of investment strategies, or does it at all? Right now it seems like we're going to be going through quantitative easing, even though they won't say that, but they are starting to quote print money,
Yeah,
even though they're not really printing, but they're just buying a lot of treasuries back and things like that, adding to their balance sheet. And then we're probably going to get a rate cut or two, especially if Trump puts in a new person that's a little bit more dovish.
yeah.
Does that impact how you guys think about it? Because I think that's the stuff that you guys probably see and notice and work through, that the average person probably investing doesn't think as deeply about.
Yeah, certainly. I think I think the markets in general are pretty efficient, meaning that if some of these decisions, no matter what they are orderly, markets will digest that and price that in pretty quickly.
Hmm.
So I think to your point in general, um, I think right now with regard to the Fed, you probably get one cut here in the first quarter.
You think they'll cut in this month?
I don't know if it's this month.
Okay.
I think sometime this quarter,
Yeah.
maybe you get one more. I mean, we're
Yeah.
kind of sitting here in January of 26. We're 375
Yeah.
from a target standpoint. I mean, when you look at their kind of their dot plot, they call it, where they think any of this stuff is going. I think we're pretty range bound. So I think we probably end the year. It probably ends the year with a 3. Is that 3.5, 3.25, 3? Who knows?
Yeah.
But
I think
but
that's a good prediction. Yeah.
yeah, but I think that, and when you think about the Fed specifically, they've got this dual mandate, we call it, right? So price stability and employment are two things that they have their eye on. And in price stability, obviously inflation has kind of come down. Tariffs have had an impact. Some of that stuff is in the courts.
Yeah, we'll see if it gets reversed
right now. And I think the administration has said, well, if it gets reversed based on that statute, that we probably, we'll just, we'll go back and do something else. But I think we, as a market, as an economy, that we've kind of digested the impact of that. And again, an unknown, that was the thing about financial markets. Financial markets, on average, every year pull back 15%.
Right.
There's just not. Sometimes you never know what the trigger is, right?
Yeah.
So in 2025, tariffs and not so much the tariff itself, but the unknown aspect of that.
Right.
Is it off? Is it on? Which country?
Yeah.
Which product or commodity?
How does it affect our relationships with different countries?
Correct.
Trade partners?
Absolutely.
Yeah,
so I
absolutely.
think that way, it was the unknown around that. Now I think the bandwidth of how that'll oscillate is a lot narrower. So at the end of the day, the market can digest that. But I think, I don't think much is going to happen on the inflation front, as I don't think we have a fear of inflation ratcheting back up. And we have an employment market which is solid but softening.
It's definitely it's my number one concern would be the labor market.
Yeah.
Probably. Yeah.
So again, when if you're the Fed, and again they're if they're prescribed, they're probably in that range where inflation's not down to their 2% target, but it starts with a 2.
Yeah.
The employment market is okay, but softening. I don't think, again, they would probably tell you their ability to react is a lot more important than their ability to predict. And I think, I don't think people mind kind of hanging out in, I think we all yearn for a time period where things are a little bit normalized.
Yeah.
Right.
Yeah.
When you look at, and some of that stuff, we can Monday morning quarterback it all day
Yeah.
long, but you do what you have to do. But, in this environment where, rates are at 0, and to your point, all of a sudden that's not enough. So we have all this quantitative easing. I mean, that can be problematic at times. And again, I think when you look at the period of time that we've been through with rates where they were, to me at least, it shows how much excess that we've had in the system. Because the fact that nothing is really broken in the rate environment that we've been in for the most part, is pretty astonishing. But I think that's just excess that has been worked out. But I think a lot of us, whether it's a business owner or investor, we would love to be in a period of time where our things are kind of normal.
Yeah.
And we can focus on the things that matter the most.
Yeah. Markets like when it's calm, they tend to like that. So
yeah.
Let me ask you this, Dan. There's been a lot of talks around 0% income tax. What are your thoughts on that? Now, I don't think that we're going to see 0% income tax. I think that's something people say and hope for, and maybe it would be nice, but I just don't see that becoming a reality. I'm curious what your thoughts are.
Yeah, I don't know if I have a thought on that. I mean, here's the reality, right? Our receipts are less than our spend, right?
Way less.
So
Yeah.
so it's
Yeah.
all that stuff is nice. And
I think they're saying the tariffs maybe can make up for some of that and be in a position to not have income tax because of the tariffs would bring in so much revenue. I don't know if I buy that though.
I mathematically, I don't know how you get there.
Yeah.
Yeah. I don't.
Yeah.
I don't know how you get there. So.
Yeah.
Again, in 2026 is a midterm year, right? So,
well, that's the other
yeah.
probably tailwind for markets, honestly. Yeah.
Yeah. So when you look at some of that stuff, right? I mean, how much of that is reality, and how much of that is
Pumping.
is marketing, right?
Yeah.
How much of that?
Yeah,
is,
exactly.
How much of that is talking to your base or talking
Right.
to who you hope is your base?
Yeah.
I think the reality is that I don't think there's any way that we can, or quite honestly, that we probably should get there. Again, having an eye on both the here and now, but also out into the future. I mean, we've got to, thank goodness we're the cleanest, dirtiest shirt in the hamper, right?
Yeah.
Because things aren't great, but they're a lot better than, I don't think anybody's there ready to take the baton. But I also think that we can't be so egotistical and cavalier to think that we can't we shouldn't be getting our house in order a little more than we are at some point. But some of those things are not popular, right? Some of those policies that may be needed don't get people elected, and I think that's and that's not new, right?
Yeah.
It's been going on for a long time. But
maybe
some of the numbers now they're getting to the point where they're concerning, or at least at long term they'll be concerning.
Yeah, I think getting rid of property tax might be kind of nice. Just get rid of the property tax. Let somebody own a home and let them own it, and let them not have to pay the government something. That maybe could be nice, but we'll see.
Especially sitting here in the good old state of Illinois,
yeah,
right?
It's not cheap.
Where that's a big part of
yeah. There's a lot of people that affects them too. I mean, in terms of people want to own a home, it's like the American dream. You have a good career, you have a home, family, whatever it is. Although I think that's changing. But, if somebody does want to own a home, it just adds another layer of burden for them.
Yeah,
it's kind of unfortunate. And then you look at all the fraud that's, again, down this rabbit hole, but you look at all the fraud and just across the board on both sides, I'm sure. It's not like a one political thing or another.
Yeah.
But just, man, could we eliminate a lot of that? And maybe that wipes out the need to have to take so much from, the people. It's interesting.
Well, and I think it is. I certainly think that there's roles that regulation and government can play. I mean, I tend to be a little more of a free market person, but to that point, the reality specific to housing, right?
Yeah.
We've had a supply and demand imbalance for a long, long time, which has made home ownership even more challenging, right? And when you look at some of the things that are just being talked about right now, one of the aspects, again, you talk about zero interest rates and cheap money and the ramifications of that. There's a lot less turnover right now with regard to homes, because there's a lot of people that have mortgages in the twos or the threes that are just saying, you know what, I'm not giving that up. Right?
Yes, for a 6.5, no thanks.
I'll either we'll suck it up and stay here, or we'll modify the home.
That's right.
Because the difference between a 3% mortgage and a 6.5% mortgage, it's huge. It's massive, right?
Yeah.
Well, and that kind of compounds the problem, because you just you don't get necessarily this natural turnover. So there's some things out there of is there ability to assume a mortgage right in a sales transaction, and there's some work being done on legislation to think about that. I think the administration just talked about there's been a lot of corporate ownership, of institutional ownership of single family homes, especially. So I think they're looking at that, and is that a policy? Is that someplace where the government should step in with some regulation to help kind of free up a little bit of that? Possibly.
Yeah.
That's not,
I think so.
It's it's interesting what any time the deck gets reshuffled, whatever that formula is of executive and congressional leadership, what they want to focus on, and certainly over the last couple of years that deck has been shuffled, but I think individuals, markets, corporations, small business, I think we're pretty darn good playing the hand that we're dealt and,
Yeah.
and just kind of figuring it out. And I, no doubt, I think whatever 2026 brings, I think collectively this is a year where we can all kind of figure it out.
Let's do it. You heard it from Dan. It's going to be a great year. No, I'm just kidding. What did anything surprise you about 2025 from a financial or investment standpoint?
No, I mean again. I've been doing this a long time, right?
Not even gold or silver? That was kind of wild, right?
You know what? I tend to, yeah. I mean, you get some of those asymmetrical moves,
Yeah.
and you look at it, and you kind of,
No one could have predicted
and
that.
you go back to the yeah. I think it helps to think about the why behind some of those things. But again, I think at the end of the day, I think if you try to find yourself too surprised, I think that could be, if you're constantly surprised, then that maybe is an issue a little bit. So,
Yeah.
Markets they're gonna ebb and flow. Every once in a while, you're gonna get these asymmetrical moves that are head scratchers that don't
Yeah.
seem to make sense. And you just, I think, it's, if you find yourself missing that, you should ask,
Yeah.
is there something that we should learn from it? But there's also, sometimes these trends really have nothing fundamental around them, right? That this is just a constant bid that may
Yeah.
not last forever. So I think that's especially when it comes to investing, there's a saying that the trend is your friend, and things that go up, even if it doesn't make sense, doesn't mean that they won't continue to go up.
Yeah.
But there are times where fundamentals matter, and I think it's one of our jobs is to try to make sense of all that in a way that in a very durable manner can create wealth and protect wealth over the long run. But yeah, it's some of those things are fun to talk about and fun to look at.
Yeah, for sure.
But yeah, there's not much that surprises me anymore, and I think that's probably just a function of just seeing a lot. It's also a function of really trying to I think we got to be careful whether we're talking about us as investors or business owners. You got to be real careful not making decisions emotionally.
Yeah.
Right.
A lot of people did that last year, I think.
Yeah, and I think we're in this environment where social media, I think as good as it is in a lot of respects, right? It preys on emotion.
For sure.
It amplifies emotion, one way or the other.
Mhm.
So I think for those important decisions in life, no matter what it is, I think you really need to step back and have a level head. And just not get caught up in that. And I think that's if there's one thing that we are built for as a firm at OnPath, and if there's one thing that we prescribe to, it's really focus on the data, take the emotion out of it. Because even us as professionals, you can't help but get emotional about things.
Mm-hmm.
So you really have to do everything in your power to put that aside and just kind of focus on the data and react to that.
Yeah. Were you always into finance and investments and things like that? Or was there some kind of magical moment where it all clicked for you and you said, this is my career path?
Great question. So in college, I was, my major is actually psychology.
Really?
Yeah.
A lot of psychology and money. There's a book called The Psychology of Money. Yeah.
I would dare say it's everything. It's everything.
Yeah.
Right. So I actually thought I was going to be a clinical psychologist.
Really?
Had a program offer in hand. And then really just kind of started to think about it. And math was another emphasis in college too. And that started kind of a pre-engineering, which was physics and math. Physics and I didn't have a great relationship, so kept the math and then found psychology. But at the end of the day, I think what I loved about psychology was the people aspect of it, right?
Yeah.
And the service and helping aspect of that. So I think, just kind of, thinking through more than anything, it was just, hey, I'm looking at 4 to 6 years of school and practicum. I'm 22 years old.
Yeah.
So I thought, maybe I'll look and see what the job market has in store, and really found finance, found wealth management. So this is all I've ever known. And I'm really, really fortunate because I found something that kind of scratches that itch from a people side.
Yeah.
And then I love the math. I love the numbers.
Yeah.
So
Yeah,
I'm
both of them
one of those
came
unique,
together,
I'm one of
right?
those
Yeah.
unique characters that this is all I've ever known.
Yeah.
6 years as a kind of a solo advisor, and then founded OnPath with another gentleman back in 2003.
Wow.
So yeah, this is all I've ever known, and I pinch myself constantly that I found something that I love, and I'm better than average at.
Well, I think that's the key. I always tell people too, if they're asking for advice, if you can find something that you love, chances are you're going to stick with it. Number one, when it gets tough, and it will get tough, it will get challenging. You will be tested, just no matter what that will happen. You will feel at your lowest. You will feel like you can't do it. You will feel like there's a big hurdle in front of you, and you'll have to get past it. And if you love what you do, it helps you get through those moments. You're willing to fight for it because you do it even if it didn't make you any money. You just love it. And the second thing is, I think you're just going to grow and learn faster because you are interested in it. You're probably going to study it outside of work hours, or listen to podcasts about it, or talk about it, with friends or whatever it is. So I think if you can find something that you truly, as cliche as it is, you truly love and are obsessed with, it'll serve you, but it'll also serve the people that you serve, your clients, because they'll feel that too.
It's really, really well said. Yeah. We talk a lot about, with our team at OnPath, we talk about continually making sure that we're giving them every opportunity to move along the path of the areas of highest competency and joy.
Yes.
Right.
Yes.
So, and again, this is work, right? These are careers. So
Sure.
you're always going to have things that you're good at that you don't love.
Yeah.
And that's just, it is what it is.
Life.
But I think when you think about a career trajectory, especially one that has some staying power, if you're, to your point, if you're continually moving down the path of every job that you have, every role that you have, if it's further and further along that competency joy continuum, I think that has a recipe for long-term success.
It's a good way to put it.
I agree 100%.
So we have a lot of founders, entrepreneurs, business owners listen to this podcast. What would you tell them if they maybe want to switch their current financial advisor or firm, or maybe they don't have a financial advisory firm and they're thinking about putting their money, with potentially an OnPath or someone like that? How would you help them sort of decide who the right firm is? Maybe they're going to interview a couple different firms and say, I have no clue. Where should I put my money? Obviously, it's a big decision.
Yeah.
You work very hard for your money. You want it to grow then at that point and keep as much of it as you possibly can. How would you help them work through that decision? What would be your advice?
That's a great question. And I think if it's okay, maybe I'll answer it a little bit differently.
Please, we're all about that here. So please, yeah.
So I think we spend a lot of time at OnPath really dissecting how do people find us, why do they stay. It's rare that we're blessed. It's rare that they leave, right? So we must be doing something. We must be doing something right. And I think, and then we look at it from an industry standpoint, right?
Yeah.
There's good data, especially in wealth management, where there's a person doing what I do, what our team does on every corner, right? There's no shortage of that. So, and again, to your point, if you're somebody out there who's looking at, it can be daunting, right? Like, how do you start? What questions do you ask? But when we look at our firm and what makes us successful, why do clients choose us? Why do they stay? What's happening in the industry? And this probably isn't surprising, but at the end of the day, it has nothing to do with the commodity of what we do, right? Like when you look at industry data as far as why do people change advisors from one to the next? And this has been the case for as long as I've been in the industry, almost 30 years. Some of those things that maybe you would intuitively think are the investment performance, fees,
Mm-hmm.
product availability. I mean, those things are nowhere near the top of the list, right? What is it? What's at the top of the list? Advisor didn't return my phone call, or now it's email. I just don't feel like a number there. It's all of that. It's all the relationship side of that. So that's why I say, if people ask me what we do, it's a little tongue in cheek to say, we're in the peace of mind business. We sit in the middle of our clients' financial life in a very boutique, high touch way, help everything being coordinated. But in an essence, that is crystallize what we do and what we do really, really well. The rest of that stuff, in my opinion, is table stakes. Clients expect us to have a world-class managed money management portfolio. People expect us to be great financial planners. People expect us to be able to, if we don't have the answer, go help find it. So I think to your question, at the end of the day, if you're out there looking for any new relationship that is important in your life that you want to be long lasting, I would say probably focus on, do I think this team, do I trust them? Do I enjoy them? Right? Like if I'm calling somebody and somebody's looking at the caller ID and going, oh no, it's Dan again. I mean, there's something broken about that relationship, right?
Yeah.
Like you should enjoy relationships. You should trust them. And they should return your phone calls. So I think if anybody's out there assessing, I think those are the most important questions that are going to really help you discern where are you going to be the happiest, rather than what's your fee structure, what's your rate of return. I mean, those things matter,
Sure,
but in this day and age, that's not the differentiating factor. And I think that's not the core thing that anybody should be worried about.
yeah. Well, that was the first thing that came to my mind was trust. I would just want to trust that where I'm putting my money, that these people are looking out for me, that I have a good relationship with them, that they're going to take care of me. And then past that, it would be like the proficiency, the fees, that kind of stuff.
Yeah,
And that's kind of what you just hit on, right?
Exactly.
Yeah,
I'm not,
yeah,
that stuff
yeah,
absolutely matters. But anymore, that's really not the differentiator, right?
yeah.
I mean, I think that's the one, with internet, and I mean the fee dispersion is really, really tight. And what everybody, we're all very transparent with that.
Okay.
That's not the differentiating factor from
Right.
one to the other. And also just with regard to investing, you rewind 20, 30 years, there were different philosophies, different product availability at different firms. That's really not the case these days, right? We can go find and use anything.
Yeah.
Right. So we're pretty agnostic when it comes to investment solution. And so from that standpoint, I think you just kind of, you should check those things, make sure that they're superior. But that is not if somebody went out and interviewed 3 firms and that's the only thing that they asked about, they sit down at the table and try to discern the difference between the 3, they're just as confused as when they started, right? Because at the end of the day, I don't think those are the things that really move the needle as much as some of those more relationship things.
Yeah.
Somebody that's there for good times and bad, that really can help you. Some of this, team that can we talked emotion a little bit ago, right? Somebody that can help you effectively navigate, whether it's tougher times in financial markets or in their own economy, right? Loss of a job, death of a loved one, or opportunities that they have, and having somebody who knows them, that can wrap a team around them to help them think through that. I mean, that's all about the relationship. And at the end of the day, I think that's what we do really, really well. And that's our differentiator more than anything, is the way we wrap everything around that. The products and services, that's just the means to the end. That's it. That's the commodity. That's not the differentiation.
What would you say to someone that says AI is going to replace financial advisors at some point?
Never happen. Well, so here, AI is a fascinating conversation. Again, I think going back to, I love this topic, and I think as a business owner, um, in the wealth management space, we shouldn't be so cavalier to say that it never will. But at the end of the day, I think we're what we do in essence, when we're sitting there, you know, AI is tremendously powerful, and we've just scratched the surface, right? Somebody said the other day, it's not like we're in the early innings of this. We're probably still in the dugout,
Yeah.
and this is going to be remarkable, and probably scary, but it's going to change the face of things probably easily more than the internet did over the last 25, 30 years.
For sure.
Right. But when you look at, anything that's out there, again, I think just what some of the things I talked about, navigating, it's one thing to have the data. It's another thing to be able to do the thing.
Yeah.
Right. And I think, AI is wonderful at putting you on maybe what you even should do, but knowing what you should do and doing it sometimes are two different things.
Yeah.
So when it comes to financial markets, you can go to AI right now. You can go to Chat GPT and put in some parameters, and it'll spit out a portfolio, and you go put that to work. And you know what? Over 20
3
years,
months later, you'll be broke. No, I'm kidding.
yeah. Well, the opposite, right? It's probably fine, right?
just
Like
kidding.
it's but when markets get funky,
Yeah.
or when you have a change in situation, and you don't know if that's what you need to do. I mean, it's, at least right now, right? It's only as good as spitting out what you prompt it to put in.
Yeah.
And when I look at where do we move the needle, where do we help clients look around corners? Where are we really good about identifying opportunity? Those are things that are really hard to put into an AI model and have it spit out something that's pretty effective. So
Mhm.
when I say, do I think AI is ever gonna replace good quality advisor teams? No. Is AI gonna make its way into our industry like it has anything else? It already is,
For sure.
and we're adopters.
Yeah,
So
yeah.
I think we're all in with some of those efficiencies and what it does well. But in a sense, at our firm, at least right now with AI 1.0, what are those things that it's probably better than people at?
Yeah.
That are just some of those mindless tasks. So here in the first quarter, we're launching an AI note taker. And same thing that my doctor just asked me, hey, can I have this running so I can be more present,
That's
right?
right. Yeah.
I don't have to worry about taking a bunch of notes. We're launching. I mean, and those things are great, right? They're probably better note takers than I am, but the key is it allows me to be even more present
Yes.
than I
Yes.
already am.
Yeah.
So I think for us, at least, all of those tasks that are so essential, especially some of those that can be kind of mind numbing
Yeah.
and
Tedious, just annoying
tedious, and
stuff.
because of
Yeah.
that, they might be prone to human error.
Yeah.
Great, let's let AI do all
That's
that
how I
stuff.
feel, Dan.
And then our team has more time to be there and present with, in our case, our clients. And that for now, that's a beautiful formula, right? Are there other industries and professions out there that probably should be a little more nervous because what they do is kind of just a little more, tedious, and there's
Yeah.
I think but listen, at the end of the day, that's been the case throughout generations, right? I mean,
Yeah.
we've always had advancements that some industries and professions find themselves going the way of the dinosaurs.
Yeah, totally.
Some of them find a way to lean in and transform themselves. And there's going to be things that are new that we can't even see yet. So
Yeah.
I think, I'm optimistic when it comes to AI in general. But there are certainly some questions that we're asking that we never did before.
Yeah.
Right.
It's changed the landscape for sure. And I agree. I think you let the AI do what the AI is best at doing, and hopefully allows the humans to do what they're best at doing and freeing them up. And I don't know about you, and I think our listeners here, I don't think you guys would want to listen to a podcast with two AIs. I just don't. Like, there's no story, there's no, what you've been through, there's no real life perspective because you're living and going through this world. It would just be two robots. Now, can a robot or an AI help you summarize things and draft some things or double check some things or analyze some things? Of course. Yeah. And I use the AI note taker today and have for a while. It's amazing. I mean, mine probably doesn't have the security stuff that your guys is going to need to have because you obviously got financial records and things like that. Yeah. But I mean, at the end of the meeting, it sends a video recording. It says the summary. It sends action items. It's like, and it's basically a free software. And so that's incredible. For the podcast, we have 3 cameras here recording right now. Once we're done, our editing team, they'll put in an AI software. It'll just edit automatically in a matter of 57 seconds or less. It'll chop up every camera angle. So when you're talking, it's on you. When I'm talking, it's on me. If we're both kind of chiming in, it's on both. That's an incredible use of AI. Yeah. What I don't think is a good use of AI is trying to let it do the human parts, like substitute for this or come up with every strategy that you do, because it doesn't understand things like a human does.
Yeah, for sure.
So
for sure.
I'm with you there. A question on, what do you see most successful founders or entrepreneurs getting wrong about wealth creation? What do they think right now that maybe is when they come to you that maybe it's a little misaligned with how it actually works?
I think that's a great it's a great question, and we spend a lot of time with entrepreneurs. Here's good or bad. Here's if this was 15 years ago, I think my answer would be maybe lack of diversification, meaning that are too many of your resources tied to in your wealth tied to your company. And again, that's just as business owners, as founders, oftentimes that just happens to be the case.
Totally.
Right?
Oh, absolutely.
And it's a phenomenal way at which to grow wealth. It's also plagued with a whole lot of risk, right? And I think by nature, you're over allocated in every aspect, right? Time,
it's everything.
Your balance sheet, your energy.
Yeah.
A lot of that stuff must go there. But as wonderful as that is, that can also be problematic too when it comes to wealth creation, because you can find yourself doing all the right things, and there could be forces outside of your control that change the scope of your trajectory overnight. That's the case with any investment, and I think one of the things that when we look at privately held, especially founder-led companies, I think this notion that things are always going to go up, and and this is so and that's probably the trend that I've seen over the last 15 years, where I think founders are starting to realize that at the end of the day, if this is going to be successful, they should take a lot of pride and put a lot of energy into the creation and growing of that. But I think we're also seeing a trend where they're a little more realistic in what this means for their future after when they're done, whatever that means. And I think particularly we see it a lot in just thinking through sometimes the complexities of intergenerational transfer of business. And I think part of that is just the notion of, or the nature of the fact that a lot of our kids don't necessarily after they're done with whatever their schooling, they don't always come back home.
Right.
They're out throughout the country. They're doing something else.
Sure.
So I think part of that just might be the nature of families these days. But I think we're finding more and more that founders are, looking at the wealth that they've grown in their business, um, less emotionally, kind of keep on going back than maybe they once did. And I think that's probably what we're seeing, and that's probably ultimately at the end of the day one of the things that founders need and business owners need to be weary of.
Yeah,
Is
I'd agree.
just not get overextended with the resource that they put into their own company.
What's one thing that you believe about wealth creation that maybe other financial advisory firms don't believe?
Um, I don't, I don't know if I have anything unique. I mean, at the end of the day, um, I come back to, anything that is sustainable, anything that is durable. It's not a short term fix,
Yeah,
right? It's just being disciplined, following long term principles, and and so I don't think our I'm not sure if we have necessarily a unique way to look at that, but we're all about long term, multi generational engagements, right?
yeah,
So, what it takes to grow wealth, what it takes to protect wealth, and what it takes to effectively transfer wealth should be very methodical, very well thought out, and most people that find themselves whatever their definition of wealthy is, most of the time that didn't happen overnight.
for sure.
And to
Yeah,
the extent that it did happen overnight, you see this all the time, study after study. Sometimes that's the wealth that is not long lasting.
that's true. You almost don't want that. You need a little challenge, and you got to earn it a little bit.
Yeah, so I think there's a lot that goes into that, but I think that slow and steady, tried and true, um, is
Hmm.
that's good medicine
Yeah,
oftentimes.
for sure. So I've got in my hand here one Bitcoin. Now, actually, it's not actually obviously a real Bitcoin because there's no physical Bitcoin that would be on the blockchain. But I did want to ask you, since we're here, and I think it's a somewhat disruptive topic depending on who you talk to, but crypto and blockchain. Do you think it's the future of finance, or do you think it's a fad?
I think it's here to stay. I don't know if I'll go so far as to say it's the future of finance, um, but certainly it's here to stay.
Yeah,
At least the core
blockchain technology.
blockchain, and even some of the
Yeah,
even the bitcoins,
yeah,
Ethereums of the world,
yeah,
they're here to stay. And and do they have a place in the economy? Yes. Do they have a place in the investment realm? Um, yes.
hmm,
Uh, and but are they going to be? Is it the end all be all? Again, I'm not sure. I'm not sure I'm there. But certainly, it's you talk about. It's interesting. You talk about the why behind a lot of these things. I mean,
yeah,
again, I think when you look at some of that decentralization aspect of it, and when you look at the U.S., which is the safety of the world's financial center, and the long term issues that we have. I mean, there's reasons that some of these things have the attention that they do. And again, to your point, there's a lot of fundamental aspects of that technology that are going to
yeah,
help change the world, like a lot of different things. So yeah,
yeah,
it's not going anywhere. That's probably not a bad thing. Like with anything, I think there's things that hopefully we figure out. Any technology, whether it's Bitcoin or AI, there's going to be anytime there's opportunity like that, there's going to be bad actors and things that we have to worry about.
sure.
How do we regulate them? What's the end result? But at the end of the day, is it a net positive that's going to be here for a long time? I think everything points to that being a resounding yes.
Yeah. And you see with the stable coins, Genius Act obviously got passed last year, 2025. A ton of inflows for stable coins now. JP Morgan Chase, got all these big companies trying to get into it now. And then, I think you got the ETFs, that are pretty heavily flowed in from 2025. And then you got just the tokenization of, I think, just about everything.
Yeah.
I mean, it seems like stock market, you'll probably have gold and silver tokenized. You'll buy things in the future. And instead of, buying it on a Friday, if you try to buy something right now at a Saturday for Friday night, Saturday at 10 a.m., you're going to have to put in the order. It's not going to probably be done till Monday at some point. On the blockchain, it's almost instantaneously. And it's, faster, potentially cheaper. And so I'm with you. I think it's an innovation. I think it's an upgrade to the current system.
Yep.
It's not everything, but it's I think it'll be pretty exciting to see. Yeah.
Don't disagree.
Yeah. Are there any cryptos that you're more bullish on, like any cryptocurrency specifically, or
no comment?
I love it.
Yeah.
Well, I'll say it. I think Ethereum is big time because it's I think a lot of the ways the rails that a lot of things are being built on. Solana, you could argue, is right there, maybe even more bullish, faster, cheaper, things like that. And I think XRP has a big opportunity this year with everything that Ripple's doing. And I think Bitcoin's just going to be that digital gold.
Yeah.
I think you could definitely argue, like, what is it really worth? You definitely could hold a Bitcoin and say, why is this thing worth money again? But it's the first of its kind. It is kind of the digital gold. And so, but I'd actually, if I could put more money, and I'm not a financial advisor, and this is not a financial advice, we'll just say that right there. But if I could put money into one cryptocurrency this year, it wouldn't be Bitcoin. It'd be some of the other ones that have real use case and real world utility. I think that's going to be really powerful. Yeah.
Well, this is where regulation saves me, right? Because I'm not going to comment
there you go,
individual companies or individual investments. So I get a pass.
I love that.
I get a pass on that. But yeah, just like anything, right? What it is worth what somebody's willing to pay for it.
That's right.
So
that's right.
You could question all day long whether that price discovery is fundamental, but the reality is that's where the price is at. So it is what it is.
Yeah, that's right. So I pulled up an article, and you guys won't be able to see it unless you're watching on the video. Maybe you can get a quick snapshot, but it's from March 5th, 2025. And basically it talks about some acquisitions you guys made. And it says, this is public knowledge. So as of December 16th, 2024, the firm OnPath manages $1.65 billion in AUM, which is assets under management, in both brokerage and advisory assets, with approximately $850 million by OnPath partner advisors, demonstrating the success of its equity alignment strategy and commitment to providing dynamic resources to advisors. How does it feel when I read that off? Is that surreal?
Completely. And I probably would use the word humbling more than anything.
Yeah. That's a big number. I mean, you started this, a couple decades ago, 23 years ago, I think we said.
Yeah.
Is that wild to kind of look back and say, holy shit, we're here?
It's wild. Oh, completely. Yeah. And it's largely the current structure that we're in right now. We founded OnPath in 2003, kind of embedded in an insurance broker-dealer relationship. Nobody's really going to understand that unless you're in the business.
It's okay.
But a lot of environment where I cut my teeth. It was great for what it was. A little bit limiting from a product standpoint. So we kind of in 2007 made the jump to what we kind of now call the independent space. And I know the number. I mean, in 2007, we started with $19 million of assets under management. A lot of the old relationship was kind of some proprietary stuff that should have stayed there.
Yeah.
So yeah, it's
geez, that's almost unbelievable reading that.
I don't. Quite honestly, I don't know how. I don't know how we did it. Right. I think it's.
Well, sure you do.
It has been
customers.
It has been. So my co-founder retired last year. Kyle. Yeah, and it was a wonderful. It was a wonderful opportunity. The big party to celebrate him.
Yeah.
We go to the archives and start pulling some of this out, and it is surreal. It's humbling. But yeah, I think and I think it's but like anything else, it's just that client first focused, doing the next best right thing, having a phenomenal team around us. And quite honestly, to the credit crisis of 2007-8 was perfect for us, right? Because here's the other thing I think as business owners in general, when you have tough times, you have a choice to make, right? And during that time, as advisors, leading clients through a point in time that really didn't have a road, we couldn't lean into history necessarily.
Yeah.
But we weren't afraid of that. And if anything, when tough times come, our communication ramps up, and it's like, hey, we don't know all the answers, but we're here and we're navigating this, sometimes hour by hour. And like anything, we're going to get on the other side of that. So those are the times that really show, as a team, as a person, as a firm, whatever, as a company, who you are. And in our world, that's when we call it, that's when money gets in motion, right? Yeah. Oftentimes, if you're displeased with anything in life, right? If you're displeased, but things are kind of going along, is that really the impetus to make the move? Sometimes not. But I think when tough times happen, that's a time when a lot of people reevaluate the relationship. So for us, it was kind of right place, right time. And then, late last year, we clicked over the 2 billion mark.
Because that was a year ago. I was going to say it's got to be higher than that now.
And again, that can change. And we don't really get, we get excited about what that means. We don't really, but it's a number that, we always say sometimes as business owners, we're so focused on tomorrow, right? We're so focused on the future. Yeah. And at least for me and for our team, what we always say is, we don't do probably a good enough job of stopping, turning around, and just appreciating where we've been. And with Kyle's retirement, it was a perfect opportunity to take that pause. But it is when we look at where are we headed as a firm, what I can tell you is it has nothing to do with those numbers. It has no. We don't even have a number goal that's out there. It is if we're going to get bigger, we want to get bigger with team members that appreciate what we do and love what we do. We want to make sure that client relationship, as we get bigger, doesn't change. So if we get to the point where our growth changes the relationship that we're able to have with clients, then that's time to shut the door, because that is everything to us. And plus, that's the reason we exist as a firm. But through the years, we've been really, really blessed with long tenure with our team. We must be doing something right, because not only do we retain, but we attract top-notch talent, which has allowed us to continue to grow as a company and continue to have more fun, more joy.
Yeah, that's right.
Along the way. Yeah. But it's a pinch me moment for sure. Yeah, when we kind of look at it's cool at where we've come.
Should be proud of it too, because you've served. There's a lot of people, other people's money in there too, that has grown over the years, and a lot of impact that you've made outside of obviously just you guys. It's everyone growing together, and so
I think it's you hit the nail on the head. It's what that number represents, right? It's the number of people that we get to impact in a meaningful way.
That's right.
And the number is just the number, and to the extent that the number grows, the byproduct of that is that probably means we're there for more people.
That's right,
and have an expanded team that allows us to do that, and that's a good thing. That's a good thing.
What was the toughest moment in your business? The darkest, maybe hit the bottom kind of moment? Did you have one of those? I'm curious, because you always look at successful businesses now and it's easy to say, oh, they're successful. They've got a team. They've got the clients. But I imagine there had to be moments where you looked in the mirror and go, Dan, what are we doing here, man?
Yeah. You know what? Probably the blessing is that nothing really comes to mind. I mean, I think, part of it is probably, part of it probably some of the hardest things, or some of those market economic moments that are,
Like 2009, 2008.
yeah,
Yeah.
or for me going back now, I didn't have the relationships that I have now, but I started in '97, so I've seen tech bubble.
Yeah, that's right.
I've lived through that.
Yeah.
08, '09 credit crisis. COVID
Yeah.
would be another one. And again, when you have the type of client relationships that we have, and when times like that, I mean, it's our job to be proactive, and some of that stuff we don't have all the answers, right? And sometimes, at least on paper, you can't help but get emotional from a client perspective, right? You can't
Yeah.
help but get emotional about that. And our job is to be the steady, um, and make changes where necessary, but make sure that we're at the helm, in a very data-driven, non-emotional way, while at the same time being there for them emotionally, because we absolutely get those concerns. I think you've got to have empathy when, at least on paper, when somebody's wealth is down 10, 20, in some of those cases 30%,
Yeah.
and they're fearful about what tomorrow brings. Again, that's where we do our best work. But it's also it's draining, especially when we don't have all the answers. So I don't know if it was the darkest, but those are probably the toughest.
Yeah.
When you just go week in, week out with
Getting your ass
with
kicked.
with hard
Yeah.
with hard conversations,
Yeah.
and then just trying to make sure that you're not only taking care of your clients, but you're taking care of your team, because they're
Yeah.
feeling that same thing.
Yes.
That you're continuing to take care of yourself, which, as business owners, sometimes that in tough times that can go by the wayside. So,
Mm-hmm.
but here the reality is there's another one coming,
Oh yeah.
right? I mean,
This too shall pass.
yeah.
Yeah.
It's I think any of us would, I mean, who knows the variety it's going to take, but
Yeah.
but that stuff is just, that's part of it, which is one of the reasons that as a firm we exist, and we'll lean into those moments as hard as they are. But yeah, that's, when that happens, no matter what business you're in, you've got a choice to make,
Yeah.
right? You can put your head in the sand, and you could ignore it, or you can be a leader to your team, to your clients, customers, and help lead the way on the other side. But the good news is, we always get on the other side of these things.
That's right.
Right.
That's
and
right.
I think that's the thing. If there's something that we can learn from history, even the ones that surprise us and haven't been around for ever or ages, the reality is, we always get on the other side. And I don't think anything is going to come that doesn't hold
Yeah.
true to that. It doesn't mean that storm can be taxing.
Oh yeah.
So that's probably that's probably been some of the tougher times, but
Keep fighting, keep getting better,
Yeah.
keep serving your people, and this too shall pass.
absolutely.
That's it, man.
Yeah.
I got a picture here to close things up. I think this is you. Is that right?
Many years ago.
And who's that?
That is my oldest.
Your oldest
Yeah,
daughter. You have
my
two
older-
daughters,
two
right? I have
daughters,
two
yeah.
daughters too.
Yeah, that's wonderful.
12 and 9.
It's
yeah.
the best
freaking
thing you
greatest.
get to do,
The
right?
greatest.
Yeah, I am. Of all
You look like a baby there.
I was a baby there.
Wow.
Yeah, so she'll turn 21 in a couple months. So
Man.
yeah, that's probably
Jeez.
20 plus years ago.
Wow.
So yeah,
They say it goes fast, and then you're like, yeah, well, okay, whatever. And then it just does.
it
It
does.
just freaking does.
Yeah.
What would you say to this Dan if he was sitting here in my seat today? What career advice might you give him? And then what would you say from a father standpoint?
Oh man, this is emotional, right?
Yeah, for sure. Yeah.
Yeah. The it's one of those things. I think if I've gotten a lot wrong, but the thing of it is, when I get things wrong, I do a good job leaning into it, realizing it, and figuring it out. I think hopefully my girls would say, if there's one thing I've gotten mostly right, it is yeah, it's that. So,
Hmm.
just I would tell him, just keep it up,
Mm.
just and you know this, like
Yeah.
sometimes we overcomplicate parenting, right?
Yes.
Like
Yes.
it is the 80, 90, 99% is just showing up.
Totally.
And
Loving them and loving them and showing up and doing your
absolutely.
best
Yeah,
and not
absolutely.
crushing yourself when you don't have your best day.
Exactly.
Yeah.
But it's one of those things. And again, I think it's the hardest. It is the best thing I get to do. It's also the hardest thing
Yeah.
that you get to do, right?
Yeah.
And I am so proud of them. But I think as any opportunity, especially you got a lot of business owners, founders.
Yeah.
Sometimes that's the toughest thing, right?
Yeah.
Is you got a business that needs you, you got team members that need you, you've got significant others, spouses that need you, you've got kids that need you. You really have to focus on getting that priority right. And when it comes to your family, that's one of those things. It is. By nature, I have long hours.
Yeah.
But I also have the opportunity that if there's something important, I figure that out, and I don't miss it.
Same.
And it goes so fast. And it is, and I've got an incredible wife too. So that's the other thing that I'm blessed with is my ability to be what I hope my kids would say a great father, is the fact that that's a team sport.
Hmm.
And she does an incredible job as well. So,
Hmm.
yeah, it is. It's one of those things. You talk about time, and we talk about Kyle, a great Kyle story with regard to kids. So I remember distinctly, we used to do breakfast every Monday morning, and Nora, my oldest, she must have been, let's call it 9, right? And we're having breakfast, and I'm kind of talking about the fact that. The fact that half of the time that she's going to kind of be under my roof full time is already gone, and how fast that goes.
Wow.
And Kyle's, he 17 years older than I am, so that was one of the blessings.
Yeah.
Lean into these people that you really trust that have been there, done that. And it's funny. He looked me dead in the eye and he goes, "Oh, buddy, you're way past half." like, what do you mean? Last time I checked,
That's
18,
true.
18 divided by 2 is
Yeah.
9. And he goes, "Yeah, but it's just they're busier."
Yeah, that's so true.
And it's all good stuff. But and holy smokes, has that been true, right? And now my wife and I, she's a junior in college. My youngest is a senior in high school. So we're gonna go into this empty nest, at least empty nest 9 months out of the year
Wow.
period. And it seems like yesterday that
Yeah, I know.
that picture was taken. So, boy, soak it all in. Yeah, don't worry about being perfect.
Yeah.
Show up with love. Uh, Set a good example. Yeah, it of all the things I do, that's my most important job,
Hmm.
and I love it more than anything.
I love that. It's
Yeah.
great advice too. Well, Dan, I appreciate you being on the show, man. This is my honor to have you on. Where
This has been great.
yeah, this has been a great conversation,
Yeah,
right?
yeah,
Yeah,
yeah.
I appreciate you sharing your story and your journey and some insights with us. I really do. Where can people go to find you, connect with you, learn more about what you guys do at OnPath too?
Yeah, so I website is always kind of the best route to find phone numbers and everything. OnPathFinancial.com, and then you can find us on all the socials, so to
Yeah.
speak. So as a firm, we've got a LinkedIn presence, a Facebook, even Instagram,
Hey. Yeah.
now.
All right.
But this has been great. Really
Cool.
appreciate the conversation. Thank you.
Yeah, I appreciate it. We'll link everything up in the show notes too, so everyone can contact you. But thanks again for coming on the show.
Oh, you're welcome. Thank you.
My pleasure.
Yep.